The market is up to, completely eased off the gains, and the breath is now in the negatives. So seeing some serious bout of profit taking. Pharmaceutical, that as a sector has made a solid comeback. So that really is your bright pocket in trade today. But let's analyze where the world of equities and commodities are headed, both domestically as well as globally. And who better than Mark Faber, the editor and publisher of the Gloom, Boom and Doom report, joining in the show to answer some of our questions on that. Mark, thank you so much for taking the time out and joining in today on ET Now. What a fabulous recovery we've seen, not just for the developed markets, but for emerging markets in India as well from the March lows. Seems like the doom is over, but is this the gloom or is it the boom which has played out?
Well, economically, it's not over yet. As you know, the economies fell off a cliff, and whereas they kind of recovered somewhat from the low point in April, they're far from where they were, say, a year ago. So I think that to say that everything is hunky-dory is a wrong statement. The markets have recovered, and if you had an index of mom-and-pop stores, in other words, of small businesses, it would look disastrous. Complete collapse. The many small businesses in the Western world that will not reopen. The many businesses in emerging markets, they will never reopen. Maybe a new crop of businesses will come up. But the point is, to say that everything is fine is just sticking your head in the sand. The reality, asset markets have done well. And the Federal Reserve has said repeatedly that they will address one of their concerns are wealth inequality. Well, so far, they've been very successful at making the rich people richer and the poor people essentially poorer.
Sure. So in the near term, are you saying that the best has played out in terms of the recovery that has played out from March? And now do we need to maintain extra caution? Because, like I said, both in India as well as, the America markets, you've seen a massive scale up come in. Is this as good as it's going to get in the near term?
Well, it's difficult to tell because, we have had a recovery. But if you look at the recovery in equity prices in the US, it's been mostly concentrated in FAANG and FAANG-related stocks. Say the New York Stock Exchange FAANG index is at an all-time high, but there are just 10 stocks in that index, and one of them is Tesla. So that is not representative of the entire stock market. Some stocks have made new highs, also semiconductor stocks, and some stocks have languished. And I think that going forward, investors should look at stocks that have languished, in other words, that are very depressed. And by the way, since you're talking so positively about stocks, let me just point out to you that no stock market in the world has outperformed gold and silver this year. Gold is up 28% and silver 53%. So instead of talking and telling me that stocks are doing so well, you should be pointing out that gold and silver have, of course, done much better than any equities.
Mark, Nikunj Dalmia also joining in. Mark, I don't know if you recall, but I recall we had an extraordinary pleasure of meeting in 2002 when you were in India. And that time you made a presentation and you said the next bull market will start in commodities. We were recovering from the 9/11 crisis. We were recovering from the TMT bubble. But your view was that go for the inflation trade rather than anything else. Do you see a similarity between what you said in 2002 and 2020, that one should buy commodities, gold, silver, metals, copper, palladium, sugar, cocoa, orange juice?
Yes, let me point out some differences and similarities. In 1999 and 2002, 2003, commodities had been in a bear market essentially since the 70s, in the case of precious metals, since 1980. So in other words, a 20 years bear market. Now, we had a bull market until 2008 for oil and for gold and silver until 2011, and for agricultural commodities a little bit differently. But basically, after 2011, commodities didn't perform well. So we've been in a bear market essentially until, in the case of precious metals, December 2015. After 2015, gold and silver have done well, but they just made recently new highs in the case of gold, and in the case of silver, it hasn't made a new high yet. So I can say precious metals are relatively inexpensive. What is really very depressed are agricultural commodities and industrial commodities, whereby if you take lumber as an example, you could say it's some kind of an industrial commodity, and that has gone ballistic recently. It's got up a lot. But to answer your general question, of course, if the Federal Reserve and other central banks are printing money, the value of money, in other words, the purchasing power, will diminish. That is not difficult to see. You print money and you print money, and so the value of this excess liquidity makes paper money lose its purchasing power. In other words, certain things go up more than cash currencies. And the question is now, what will go up the most? As you know, between, say, 2009 and recently, US stocks have performed fantastically well. Question is, now that they are more than 50% of the world's stock market capitalization, will this outperformance of America vis-a-vis the rest of the world continue? I don't think so. I think emerging markets will begin to outperform, including India. And I think that at the same time, value, in other words, more commodity-related stocks, whether you talk about BHP or Rio Tinto or Glencore or the major oils, which have grossly underperformed indices or the S&P 500, I think they look quite attractive. And I think also banks, which have grossly underperformed, look quite attractive.
Mark. So, Mark, my next question is, what is your view on the dollar index? And frankly, I was a bit amazed when US Fed said we will bring interest rates down and print more money. The dollar index actually first rallied before it crashed. So where is the dollar index headed, considering that the US Fed is running a printing machine which is working now 24 hours a day?
I like the expression, a printing machine. They're not running a printing machine. They're running a factory with thousands of printing machines to keep up with the demand. But the problem is really, it's not just the Fed that is printing money. The other central banks do the same. So it's not a crystal clear case that the US dollar will
one more question,
collapse against all currencies. It may collapse against some currencies, but not against others. And I think the most likely place or currency it will collapse against is gold, silver, platinum, and also bitcoins, currencies of which the supply cannot be increased that much. It can be increased a little, but not that much. But to answer your question about the dollar, I mean, quite frankly, if you look at the team Biden, Kamala Harris, and Trump, Pence, I don't think that anyone can have a lot of confidence in the US. If you look at the response to all the riots in the US, if you look at the financial condition of cities and states and the federal government, I don't think there's much confidence you can have in the US dollar. So my view is actually very negative about the US dollar. But as I said, the others are not much better, but maybe some are a little better. And there's one thing I want to point out. In Europe, we achieved a high degree of socialism in the last few years. And we have now a pushback. And I think that in Europe, the peak socialism has been reached. We'll move more to the right politically. But in America, unfortunately, I believe that we're moving straight into socialism, and that this will be very negative for the US dollar.
Mark, my immediate follow-up question is that China, in a sense, has been a big guzzler of commodities. They've generated demand. That's where the luxury market has got created. Chinese are rich, Chinese are consuming, and Chinese are spending. Given that, there is a complete rhetoric to avoid Chinese manufacturing products. Companies are trying to become self-dependent. In America, it is America first. In India, it is Atmanirbhar first. What will happen to Chinese product demands? And if China slows down, could that backfire for commodities?
Yes, this is correct what you're saying. And it's actually quite amusing to think that everybody wants to be first in the world when it's fairly clearly established that actually foreign trade has boosted the standards of living of people around the world incredibly. I mean, I just like to remind you, the world has never been richer in terms of low poverty rates, in terms of standards of living and so forth, for the typical person in the world than it is today. This system has some drawbacks, and it's the capitalistic system is better at creating wealth than at distributing wealth. That I agree. This is an observation that Schumpeter already made. But the alternative are so much worse. You understand? If you go back to socialism, you will see what happens in India. India is still half socialist, but at least it's made a step into the right direction, into opening up the economy and freeing up the economy and introducing market-based principles and the capitalistic system. And yes, there are in India some very wealthy people, but there have always been in India a lot of wealthy people. The only difference is before there were a lot of wealthy people and everybody was very poor, everybody else. And now you have immensely wealthy people, but at least a lot of Indians, they have seized the opportunity that the capitalistic system offers, and they have improved their standard of living and also really the lowest classes standard of living. So I think, like in China, you could say, yes, not everything is fair, and not everything has succeeded. But we have to acknowledge that the poverty rates are down, and that the prosperity we experience today in India, I'm mentioning this as a relative prosperity, is the highest for sure in the last 100 years or so. So I'd say if China slows down because of trade restrictions and also because of their credit debt, their credit bubble, it will have an impact on commodity prices. But I think commodity prices have actually discounted a slowdown in China. And I think that commodity prices will react in future more to the money printing. You know, I've been on the board of several mining companies. I can tell you, from the time you and I would decide to develop a mine until we would produce, it would take at least 15 years. You understand? The supply is very limited. You can't just turn it on and off. The supply of copper increases. It's a very tedious job, and not many people have the expertise to do that. And it takes a long time. So if you print money like we've printed, I think a reasonable bet would be to buy some commodity-related stocks. And especially, as I mentioned, agriculture is very depressed.
Sure. Just to the point, Mark, that you were earlier making, would a Joe Biden-Kamala Harris combo be detrimental for the equity markets, though? If at all that combo does work?
I didn't say they would be detrimental for the equity markets. I want to point this out because under Biden, Harris, or under Trump, Pence, the Fed will continue to print money. They have actually no option. They have to do that in the long run. So equity markets may stay elevated, but it would be wrong to think that money printing will create prosperity. Because if money printing created prosperity, every country would just print money. Nobody would manufacture anything. Why make anything if you can just print money? Much simpler. So I think we have to go back to simple economics, not the economics of some academics that have never worked in their lives, but to real economics where people actually produce things, and as a result of the production of goods or the production of services, prosperity then follows.
Sure. Just on the point that you were making about agri-commodities, however, Mark, I just wanted your sense on where agri-commodities are headed, because slowly what we're seeing is also a bit of an inch up when it comes to sugar, cocoa, or for that matter, tea prices as well. Do you think there is a meaningful trade there?
Yes, I mean, I think that they are extremely depressed, and that they can rally, and not just a little bit, but significantly from these low points. But I want to here really warn individual investors to invest in commodities for an individual is very difficult because he has to get the timing right. And if he doesn't get the timing right, it will be a costly exercise until the commodity really moves in one or the other direction. So it's not an easy game. But I would, let's say, if I were a wealthy man, and I'm not wealthy, but I would buy some agricultural land for no other reason also that I believe that we are in a changing society. Over the last 200 years, we had urbanization. In other words, people moved from the countryside to the cities and then suburbs. And then every morning they would take the subway or the bus or the car or the bicycle and spend an hour or 2 hours going to work, then working and wasting time in meetings, and then driving back home for 2 hours to an angry wife because you're late. Anyway, now this is going to change. As a result of modern communication technology, including Skype and Zoom and so forth, I can work from my home. I don't need to go to an office. Why would I go to an office every day? I can go to an office every 2 weeks or once a week or once a month for some meetings, and the rest I can do all online. You understand? And now we have the COVID case, the virus. That is an inducement for people to live in the countryside and not in congested places. So I think a lot of real estate in secondary location, not in the center of Mumbai. I think the center of Mumbai is not going to be particularly attractive, but on the outskirts, maybe 1-2 hours from Mumbai, there will be satellite cities where you can acquire a property at a fraction of the price in Mumbai. The same for London. If you move away from London 2 hours, you can buy a nice house for the price of a small flat in London in a good location. So I believe a lot of people will take that choice and move to the countryside, and some will also buy farms. And that is a trend that will offer some interesting investment opportunities.
It's a great point, Mark, but you said for somebody who's rich can buy land and can buy farmland. But my last question to you, Mark, is that what about somebody who wants to become rich or get rich? What should that person buy?
Well, I think if you really want to be rich, you have to work a lot, whatever that may be. Number two, instead of posting your picture on Facebook 3 times a day, I would go and learn something and study. Whether that study includes getting skills at being a good carpenter, electrician, or plumber. These are scarcity jobs in advanced societies, and these are very highly paid jobs if the person has the necessary skills. So whatever you do, you need to have high level of skills. If you are an economist, you have to be a good economist. If you are a computer technician, you have to be a good one. And I think you just raised an interesting question. If you want to be rich, I can tell you, if you want to be rich, money printing by the Fed and by the Reserve Bank of India isn't going to help you. That I guarantee you. The only thing that can help you is, as I said, hard and focused, disciplined work, consistent work, and consistent improvement in your knowledge and skills. That will make you maybe rich, not sure, but it gives you at least a better chance to be rich.
You know, what a life what a life-changing answer, Mark. I mean, that's the reason why we always look forward to interacting with you, because you had years and years of experience of understanding market cycles and wisdom of life. So stay safe, Mark. Certainly hope to see much more of you going forward, and let's hope that we get a chance to meet soon once the crisis is over a cup of coffee.
I hope so. But I have to tell you, I still don't understand markets 100%. When I grew up, I never thought that I would see interest rates below zero. Never, ever.
Well, no one thought that, Mark, but that's what markets are currently staring at.
Yes.
So thank you very much once again, and stay safe.
Thank you for having me. Thank you very much. And all the best. And stay healthy. Bye-bye.
Well, Aisha, thank you very much. Well, Aisha,